what you need to do is have time on your side. If you're only trading weeklies, then you basically have to be right. Hey guys, welcome back to another video. Today is September 10th, 2020, and today I just want to walk you through one of my favorite plays, which is selling puts on Workhorse. Workhorse is an electric vehicle company that I'm very bullish on. They make the vans that are roughly the size of UPS trucks, and they're not in competition with the big players like Tesla and Hyliion when it comes to really big trucks. Their niche is that size right in between, a smaller van and a bigger truck. I like their business. I think their truck design is cool, and they are in position to get the USPS, the United States Postal Service contract. And as long as they get that, their stock should definitely shoot up. At the same time, because they are an EV company and there's a lot of uncertainty in that market, their IV is high. And when their IV is high, that means we get juicy premiums. So let's take a look. Because it's a red day for Workhorse where it's down a little bit, that means the premium when selling puts are also a little bit higher. I always try to sell when it's a red day. Recently, it has been kind of on a tear, so it's a little bit risky. Who knows how long it could hold at this current level. It might fall down as low as, I think, 1723, 1643, 16. These are good resistance points. I don't think it'll fall below that, but it will definitely has a good chance of touching that. So now let's go to options. If we're selling puts that expire tomorrow, as you can see, we're not going to get a lot of premium. And it's also a little bit risky because who knows what is going to happen tomorrow. We only have one day to plan if we choose this expiration date. Now, I've been watching a lot of Tasty Trades, and that is a channel run by the guy who actually made the Think or Swim platform, one of the premier trading platforms. They always recommend selecting an expiration date 45 days from when you select it. And at first that seemed like a little bit much, but as I'm trading options, I realized that what you need to do is have time on your side. If you're only trading weeklies, then you basically have to be right. You have to know the direction of the market. If you're wrong, you're going to lose money. Versus if you have 45 days, you don't have to be right because the market swings back and forth. You just have to have good money management and not get greedy and take profit when it goes into your favor. Let's look at 45 days from today. It should be about October 23rd. And if we go to something with even 20 delta now, at 20 delta at a $17 strike price, we can get this much premium. And remember before I noted those resistance points, I think $17 is looking pretty good, but we can get a little bit safer. I think $16.50 will be even safer. Let's get it under 20 delta. I like this one. It feels pretty good. Okay, let's do it. The goal when you select an expiration date this far out, 45 days out, you don't want it to wait till expiration, because if you're waiting till expiration, then again, you have to have made the right call. The actual strategy to have the highest win percentage is to just take profits at 50%, sometimes even a little bit lower. If you're taking profits consistently at 50%, you will be much better off in the long run. All right, 220. Workhorse is actually going positive now. I'm going to set the limit price to 2.18. If it doesn't get filled, it doesn't get filled. Yeah, as you can see, the price of this option is already dropping. I actually don't really want to sell now. Now that Workhorse is positive, these premiums are dropping. If the price of Workhorse drops, then maybe this will get filled. If it doesn't, no harm, no foul. I placed it, but at this rate, as Workhorse is continuing to shoot up, it's probably not going to work. And this is another great lesson on how fast options move. Because I was just thinking about it and explaining my thoughts, I totally missed the boat. I could have sold it at $2.15 or close to $2.20. Now it drops all the way below $2. And as of right now, it's not worth it anymore to sell it. It's too risky when the price is pushing its highest it's ever been. The premiums of selling the put are just going to be lower, and the numbers don't make as much sense. If that was helpful, please like and subscribe. This is the best channel to learn live and where newbie Squires become pro green knights. Thank you and stay tuned.